Welcome to Addicted to Real Estate TV. On today's episode, we're going to talk about my favorite saying, get busy buying. So stick around, I got some great statistics for you that are going to pump you up.
To say you gotta know somebody, or know somebody to get somewhere these days. To say you know that's alright, yeah that's alright. Cause you know that's alright with me. Yeah, you know that's alright, yeah that's alright. Cause you know that's alright.
Hi, I'm Phil Falcone, your host of Addicted to Real Estate TV. Today's episode was sponsored by Realty Mark 100, where real estate investors can get MLS access with no contracts for only $59 a month. If you're watching this on my website, you can just click on the link right here. Or if you're seeing it somewhere else, you can just shoot me an email, phil@addictedtorealestate.com. Email address is below. And send me an email. Let me know you want MLS access, and I'll show you how easy and simple that is to get. So today I want to talk about get busy buying. The National Association of Realtors just came out with the 2011 statistics for real estate investors. This is all for real estate investors. Some information that I want to share with you, and I want to tell you I feel great about it. So let's get right into it. One of the numbers that really stood out to me was that 41% of the investors who did buy a home, this is not all investors, this is all the investors that bought a home, 41% of them bought more than one home in 2011. And to me, that's a great number. I mean, that shows that people are out there gobbling up these properties. And get busy buying, okay? You know, I keep saying, you know, landlords have always been given a bad name in certain cities, like Philadelphia, for example, where we're just not appreciated for what we do. But the truth is that we're the saviors who are going to fix this housing market. By getting out there, buying these properties, fixing them up, spending money with contractors, local stores, making nice properties, which then attracts high-quality people. It's all good. And any idiot who doesn't understand that, I'm not going to give them the time of day, because I'm going to continue to do what I do, which I know is right. It's a great way to make money, and it helps everyone involved. It helps the people I buy the houses from. It helps me. It helps the individuals who rent the homes. It helps all the neighbors. So it's all good. And anyone who can't see it just doesn't have the first clue about the real estate investing business. All right, another statistic that stood out to me a lot was that there was a 27% increase in homes purchased by real estate investors. I mean, in the fourth quarter of 2010, I finally decided that I was going to jump back in and start buying houses, as many of them as I can. And I've stayed true to that decision, and I've been doing it ever since the fourth quarter of 2010. I'm buying a lot of real estate right now, acquiring as much as possible. You know, approximately $200,000 house a month. I'm picking up $2.4 million a year in real estate. Now, I'm talking about houses that I'm buying and keeping for myself. I'm not talking about wholesale deals or flips or anything else that I might be involved in. Okay, that's a bare minimum of what my goal is each and every month, to do one $200,000 house at least. And I'm sticking to that. And apparently 27% of more real estate investors have come out, almost 1/3, have come out and said, yes, 2011 is a great time to buy. And it's only going to go up from here. It's only going to get better from here. I'm not saying that the real estate prices are going to go up. I think 2012, 2013 is probably going to stay flat, depending on what happens with the presidential election coming up in November. You know, I think we've got a buying opportunity, a window of maybe a couple of years, maybe a year and a half. So you got to get out there now, folks, and you got to get busy buying. All right, another statistic that popped out to me that made a lot of sense. 49% of all the real estate investors that bought homes in 2011 did it with cash. I'm constantly getting asked, Phil, how do you raise private money? How come I can't raise private money? I can't do it. You could do it because you wrote a book and you got a TV show, but I can't do it. Baloney. There's one reason and one reason alone you can't do it, and it's probably because your deals stink. Okay? Your deals are terrible. All right? What you want to do is structure excellent deals. If you don't know how to structure excellent deals, you need to get the education to teach you how to do that, and I provide a lot of that for you. And what you do then is, when you have a strong deal, the private investors will be fighting to give you the money. You just have to believe me on that. Put together strong deals. Learn this business inside and out. The first job, if you're new in this business, is to do nothing but learn. Learn, learn, learn. Then go out and make it happen. And you'll see it's easy to raise private money. I'll give you a quick tip how to raise some private money right now. I always tell people that to get private money, all you need to do is look in this thing. This is my cell phone. Now, I'm not talking about my cell phone. You don't get to look in my cell phone. You need to look in your cell phone. All right? And what you need to do is you need to look for individuals who know you, like you, trust you. People who you have a relationship with, your friends, your family, people who you've worked with, people who respect you, people who understand that you're a quality individual, that you're an honorable person. Hopefully you are. And you're not going to have any problem. Those are the best people to go to first. You know, sometimes people say, well, I don't want to be in business with my family or whatever. Guess what? I call my family first about everything I'm doing. Because I want them to know, look, you know, I'm doing you a favor by even letting you lend me money on this deal. This is an amazing deal. Right? What are you doing with your money right now? You're in a 1.5% on a CD. Are you kidding me? I pay 7% interest only on deals that I do. You got to be kidding if you don't want to take that deal. So I offer to them in a manner where, I mean, I don't pose it like I'm begging for the money. I let them know that I'm doing them a favor. These are strong real estate deals I'm bringing to them, and I expect them to want to be involved in it if they've got the money available and if they have a basic knowledge of real estate. And look, when you're buying single-family homes and you're looking for private money, who doesn't understand how a single-family home works? It's simple. You buy a house, you fix it up, you stick somebody in it, the tenant pays the rent is used to pay the mortgage. It's very simple, okay? So even someone who has no knowledge on real estate investing understands that much. Another statistic that popped out to me was 50% of the properties that were purchased in 2011 by investors were distressed properties, meaning that they were pre-foreclosure properties, REOs, short sales, whatever, okay? There were people who were behind in their mortgage and weren't paying the mortgage. Could have been sheriff sales or whatever. Put them all together. What's that tell you? That tells me that 50% of the deals weren't in distress. Now, that's the area I mostly focus on. I have nothing against sheriff sales, REO, short sales. I've bought more than my share. Probably buy many, many more. But my favorite kind of deals are to go after the people who are sitting on the sideline, who are paying their mortgage. They want to sell their home for good reasons. Maybe they got a kid coming on the way and they need a bigger house. Maybe they got a job in Alabama and they need to leave this area. There's a million reasons why. Maybe they're downsizing, maybe they're upsizing, who knows what the reasons are. But those people are sitting on the sidelines because they just don't want to put their house up for sale and sell it in today's market because they figure they're probably going to have a hard time selling it. So what you want to do is drop marketing to those kind of people, okay? And then you want to get belly to belly with them, meaning the seller, they're the seller, I'm the buyer, sit down at the kitchen table, make a deal with them. That's what my buyer's briefcase package that's coming up is all about. I teach you how to do that. And the buyer's briefcase, it's going to be ready for sale in May. We're putting it together now. We're working on it. A lot of time's being spent on it. Approximately a day and a half every week we're working on it. It's coming along beautifully. And this package is going to be the best material I've ever put out. You're talking about a guy who's made over 300 videos. Some of my videos are over 2 hours long. They're movies. You know, I can't call them videos. They're movies. I mean, the buyer's briefcase is going to be the best stuff I've ever put out, where I give you the contracts, where I teach you these 12 home buying techniques that I'm using today. And, you know, seller financing, subject to private money, wholesaling to yourself, walking the financing, combinations of these various techniques used together, which nobody teaches. And I give you all the contracts to do this. I give you all the education. I give you all the sales. So, folks, it's time to get busy buying. If you don't know how to do it, you know, buy my book, read it, sign up for this web TV show. Take a look at the buyer's briefcase, which is coming out soon. Nothing I've put together has been better than this material. I'm very, very proud of what I'm putting together. All right, back to the statistics. Another thing that happened with the National Association of Realtor Statistics is that flipping was decreased. Now, I assume that their definition of flipping is when an investor buys a property under market value, fixes it up, and then sells it at the retail level. And we all know that retail sales are down, so it's no surprise that flipping is most likely down as well. And, I used to do a lot of flipping whenever I needed cash. I'm a buy and hold guy my whole life, but if I need a few bucks in my pocket, I go out and I do a flip, okay? And I'm still open to doing some of that right now if I need the money. But it's no surprise to me that flipping has decreased. And in many ways, I'd say that, retail sales-oriented flips, where the final product has to be sold on the market, is much, much tougher to do today than it has been in the past, okay? Wholesaling, however, has increased. And, a lot of the numbers, the increase of 27% and the 41% of investors buying more than one property, some of those numbers may be skewed a little bit from wholesalers who sometimes do back-to-back closings. So if a wholesaler buys a property, he settles on it, and then he turns around and sells it to somebody else. Each deal gets 2 settlements as opposed to 1, and that's probably pumping up the numbers a little bit. I think what it teaches you is if the flipping is down and the retail flips are not as easy to do as they used to be, that's pretty evident from these numbers, then probably what you want to do is wholesale deals and try to sell them to investors. Okay, you're still making decent money. You might make less than you made before, but it's also a lot easier because you don't have to renovate the house. And in the end, you still end up making the money, which is the whole purpose of flipping and wholesaling. All that being said, flipping and wholesaling is not buying and holding. Flipping and wholesaling is just a way to make some money. If you need money, you got to do what you got to do. We all need to eat, okay? But remember, the best way you're going to get rich in this business is what? Buy and hold. Right on the front cover of my book, Addicted to Real Estate, is a picture of my wife and I. And in this picture, my wife is talking to me and she's saying, Phil, honey, are you listening? And I'm not listening. Why? I'm addicted to real estate. What the hell am I listening to her for? Okay? And balloon above my head, because I'm just thinking, says a $12 million portfolio with a 7% in annual increase is $840,000 a year in equity. So what's my point? A lot of people look at that and they go, Phil, that's funny. It's not meant to be funny. Other people go, oh, it's a cute picture. I like it. It's an attractive picture. It wasn't meant to be attractive, right? That represents my entire real estate philosophy in one picture. And that's why I put it on the cover of my book. What I'm trying to say there, if you just bought enough property and you had a $12 million portfolio and the market just went up 7% in 1 year, which is a reasonable expectation, you're up $840,000 a year in equity tax free. Now, how are you going to make that kind of money flipping and wholesaling? And even if you did make that kind of money, you'd get taxed to death on it, okay? When you do it with buy and hold, it's tax free. You need some of that money, you can always flip one of those deals, you can refi them, there's a million things you can do. You can 1031 them into bigger buildings. This is the greatest business to be in. It's a great business. I love this business. I'm addicted to this business. Trust me when I tell you, you need to get busy buying, folks. If this is the first time you're watching this episode, make sure you go to addictedtorealestate.com, put in your name and email so I can keep showing you this information and sharing with you some of the greatest ideas that are going on in the market today. I'm not just some guy who sells info products or writes books. I'm doing it. And if you don't believe me, I mean, give me a call, prove it to you in about one email. I go out and I do deals all the time. I'm wholesaling, I'm flipping, I'm buying and holding. I have commercial properties. I 1031 exchange. I'm looking at bulk REO deals. I'm buying in Florida. I'm real estate 24/7, okay? I'm Phil Falcone from Addicted to Real Estate. Thanks for watching this video. Don't forget to sign up for my web TV show, and let's get busy buying.